Welcome today to the Mentis podcast. Today we've got Mark Updegraff with the Updegraff Companies. He's located in Rochester, New York. He's got a lot going on. Mark, thank you for coming today.
Oh, absolutely. Thanks for having me.
I appreciate your time, especially with everything you've got going on. You've got a lot of in-house, kind of vertically integrated your real estate company. Can you talk about how maybe you got started and how you decided to bring some of your in-house property management, your maintenance, and maybe how is that giving you an edge in today's market?
Sure. The ability to control what people are doing, where they're doing it, and when they're doing it is huge in real estate. I'm sure you're aware that, if you're relying on subcontractors, they get busy and you might not be their best client. So you might take, a second rung on the ladder or a third rung on the ladder. And, we have relationships with our clients and we need to deliver. So I found early on that being able to control who does what, where, and when was going to be very beneficial to my business. If I've got an emergency, I need to be able to put out that fire and let the client know that we're taking care of them and everything, we've got it handled 100%, immediately.
Yeah, that's great. But at what point did you decide that it was okay to bring it in-house? So did you start from scratch? Maybe give us an idea, like at what point
Sure.
was that inflection point where you're like, okay, I need to bring it in-house, and then you started to build those teams?
Yeah. So I kind of started like you did, back in 2008, I purchased my first single family home. All my friends and family thought I was nuts because of everything that was happening in the news. And, I really just wanted to start putting my money to work. So I had done a lot of entrepreneurial activities before that to save up a little bit of money and invested in something. And I thought real estate was really the avenue that I wanted to take. So we had a neighborhood that was pretty distressed, but you could tell it had a lot of seeds that were being planted for gentrification and revitalization. We had a lot of local businesses that they didn't care that there were still crack deals going on across the street. That was their spot. They could get into that spot because the price was right. Obviously prices are going to be repressed if you got a lot of drug activity and you got a lot of crime. So they planted their flags early on. I could see that because I would patron their places. We would go eat at the restaurants. We would shop at the shops. And I said, I want to be part of this community. I think that over the long haul, if people like them and people like me can all commit to a particular area, and we've got geographical borders that can kind of isolate that area, we can start to brand it. We could lift the water and all the ships could rise. So I purchased my first house over in that area, kind of near where a new bar was just about to open up. And I kind of had the inside scoop on that. It was previously a bar that I went to in college, and it had shut down because, it just got too rowdy in the location. But the new bar owner that was going to come in, it was an English pub, and he was going to have micro drafts. And, in that time period, there wasn't a lot of that going on. So I was like, this could be a really good spot. So I picked up the asset. It was $55,000. I was going to school. I was working full time. And I had this property that was pretty, the woman that sold it to me had lived in it probably for 30 years. She was a single older lady. All her kids were gone. And, it needed everything. It needed a bathroom, it needed a kitchen, it needed paint. So I went in and I did it myself with the help of some friends. And that was kind of my introduction into real estate. And, I had tools stolen. I had subcontractors that were subpar for certain things. So I got a real quick introduction into, okay, how are we going to manage this with, you're trying to save money. So you can't afford to hire the best subcontractors out there, but then you get what you pay for. So immediately I was like, okay, I can do a lot of this work, and I can start to, 1099 some people that I know pretty well that are in the trades and bring them in, not as employees at first, because I wasn't ready to take on the responsibility of a payroll at that point. So that's kind of how I got introduced to it. And that's kind of how I started to steer away from contractors to begin with. I considered a contractor a con artist. I really didn't have those relationships with the more established contractors because I couldn't afford to hire them.
Sure. So you started hiring in-house property management. You have maintenance techs. Now you have, leasing specialist. You have accounting, and it's kind of all focused right in Rochester, New York. Is that correct?
That's correct. Yeah. So I followed that path with like the one house, and then get another house, and then slowly build it over years. it probably wasn't until, I had about, let's call it a dozen or maybe 2 dozen houses that I was personally managing. So I was the manager. I had gotten licensed as a broker to do this. And my broker at the time, I did some sales because I wanted extra capital to invest into the real estate.
Were
So
you,
I'm
with your broker license, were you finding deals and rolling your commissions into them as well?
Yeah, yeah.
Okay.
So I got the license as a broker or as a realtor and then as a broker originally because my agent didn't want to work with $50,000 houses. He was more interested in selling $200,000, $300,000 houses. I get it. The commission is not the same on a $50,000 house. And I knew that this was before multiple offers and escalations. I knew that if I was the early bird, I would get the worm. So I really wanted to be the early bird. And a couple times he came through and we got some contracts before the other offers came in and we were able to keep the price low. But I could feel that shift where things were getting more competitive and I really wanted to have an edge. So I got the license, honestly, just so I could open the door. And I told my wife at the time, I'll throw my hat in the ring for sales. I'll try to help people buy retail houses. I'm not going to say no to it, but I've never considered myself a salesperson. So I thought it would be a very weird career shift. I was an engineer, I was in imaging, and now I'm in sales. But the feedback I got was pretty good. They all said, we like that you're approaching this from a construction point of view. You're educating us on what's good about this house and what's bad about this house. And a lot of times people would end up buying houses where, I felt bad because I really picked them apart and said that this is wrong, that's wrong. And these are things that you're going to have to address in the future. They appreciated that and they were happy that they knew that getting into the house versus, buying it and then finding out later. So, I think I just was in the right spot at the right time to build up a nice client base. And because I was on sites like Bigger Pockets, I was getting good incoming leads for investors that weren't Zillow related. So I had a nice influx of people that not only did they want somebody to identify the property, help them buy it, but they also needed management. So that's when I started the management team, on payroll because, I had my 20 units. I was super busy brokering sales. So I actually hired an admin first because I hate paperwork and, it has to be done with real estate or you don't get paid. So my first hire was somebody just to help me with the back end of the paperwork so I could be out in the field pushing the sales. And from her, she had an interest in investing. Her boyfriend had an interest in investing, and they started buying some properties and having us manage them. And then we really identified the need to really get more people in-house to do the management, or it was all going to blow up in our face because the volume was increasing quicker than we had the staff to handle it. As a real estate investor, you're not just running one company. Every time you've got an LLC, you might have one property in it. If it's a big property, or you might have 10, in duplex, a threeplex, a fourplex, all bundled into this LLC, and you're constantly doing refinances and moving properties to different entities. And, you want to pull equity out of this and you want to separate liability from that. So there's a lot of moving parts. And then you add the layer of construction, you add the layer of management, you add the layer of brokerage. And you have to love accounting to want to jump into that role. So,
as you go through this whole story, I know a lot of what you were saying. I think this is a very familiar story for a lot of people who got started. They kind of get into real estate, get their first investment. In your case, you were going down the sales route and you added management and you added in-house construction. We did a lot of the same stuff. You had a lot of we were trying to get some of that vertical integration. We brought people in-house to do all of the renovations because we were always doing a value add. And we were trying to, really make sense of this really fast growing company that we had. So you kind of outlining that really, I think, is going to resonate with a lot of people who might have an idea of what you went through. But let's fast forward it to today. I think we took a different path several years ago, which really gave us the ability to kind of bring some stabilization to the whole situation. Because in those first few years, you're just going as fast as you can, and probably enough organization behind it. But that's just part of that new company. What did you do? Was there an inflection point? What did you do that really got you to a point where you're like, okay, this is sustainable, healthy growth that I know can sustain any type of downturn in the in an economy or pivots in the market, whatever it might be. I think we went the direction of larger scale apartments. gave us the ability to hire really good people and work with quality professionals, kind of all the way from the contractor up to the accountants. And we took that approach, but staying local, keeping vertically integrated. It sounds like you went a little bit different. What did you learn? What are the takeaways over the last decade?
Yeah, I think there's a critical mass that you need to manage to be able to feel good and feel scalable, right? Until I hit that critical mass, I always felt like, I'm really investing into this company to get it to this critical mass.
What was that critical mass? Is it the sales? Is it number of units?
No, the units. I tend to keep everything compartmentalized, so I don't cross profits from one company to another. So
Good.
if we're talking about the management side, I would say, I'd have to do an exact calculation, but my gut is telling me it's like 250 units.
Okay, those are for other people just to get some cash flow in the door. And then,
well, I keep all my LLCs are separate and they're treated just like owners. So I want to feel any pain in the system. So if I've got LLC 1 with a property in it, that pays the same thing that you would pay if you were hiring us as your manager.
So these 250 units are yours? Or they're
no. So I've got units under management, and then I also have clients that have brought me units over the years. So as I started as the broker, they would say, Mark, we see what you're doing. We want to do the same thing. And
so you're kind of always turnkey approach. Hey, I'm not going to sell you this place. I'll renovate it for you. I will then manage it for you.
Yeah.
And then you're just, handling all aspects of that investment for investors. Okay. Have you turned that over on investors? Have you said, you know what, I'm going to buy it. I'm going to, I'm going to bring it to the table. I'm going to renovate it. I'm going to manage it. Do you want to put some money into my deals? Have you done any of that?
Not in that exact way. I've done partnerships with people.
Sure.
So I'm super nice. I like to mentor people. I like to help people. So I've never really, and I think I'll start moving forward. I've kind of come to this inflection point now, which is why I started listening to all these podcasts. And that's why I emailed you, because I listened to your podcast where you were interviewed. And I was like, okay, I need to stop what I'm doing and really refocus on what I should be doing.
You had shared earlier that you're working on a new development deal. You've got 10 units going, and it's a downtown location, or I guess a loft style apartments, 3-story building. I guess it's a mixed use property. That seems more like you're stepping up to the, to the next level of investments. And how many people are involved in that? Is that your property?
That's my property. Yep. Yeah, I purchased that.
That sounds like it's a great deal. If you're the only, sometimes you take investor money, you got to answer to different people. If you're the one in control over this and you've got the expertise in the area, you start stacking these on top of each other. These are great long-term investments, I would assume.
Right. Yeah. And I'm very happy that, I've finally started to pull this off. I purchased the property probably 5 years ago.
Okay.
And when I purchased it, we knew we were going to move into the first floor because we were coming from like a 200 square foot office, and I was jamming like 5 people into it. Nobody wanted to go to the bathroom because it was like too close quarters. So we moved out of there. We moved in. We expanded to the first floor, which is about 4,000 square feet. And it's perfect. It's the perfect square footage. And then I had these 2 floors above me that I originally just tried to lease out as office space. And our downtown is so saturated with vacant office space that it was impossible to lease it. We've got legacy companies like Kodak, Xerox, and Bosch and Lomb that are all gone, and they've abandoned these buildings of office space.
Yeah, well, it's not going to get any better. I don't think the office conversion is on. Right. Especially if the building can be converted. Some of these office complexes are going to struggle, but it sounds like you have one that's like kind of that downtown feel where you can maybe convert it and still, save like the roof in the common area. Yeah.
Yeah, it's a good size. I have parking. I've got 21 parking spaces, which is uncommon for our downtown. And it's a really, really solid building. So, when I bought it, I did want to develop it into apartments, but I wasn't there yet financially, track record wise, to pull it off. So I know what I want to do, and I just don't know how I'm going to quite get there yet, financially or logistically. So that was kind of a leap of faith building that I purchased, and I'm finally now, and it's way overdue. Like, I wish I would have been able to do this when the rates were lower. My pro forma would be a lot better, but hindsight. So we're moving forward. We've closed our loan. We've got the demo completed. We expect the project will be done in a year from now, as long as no major hurdles come up, but it seems doable.
But your local connections, I'm assuming, probably played a lot into how you were able to maybe get something zoned. Are you close to the local government? Or did you get better construction pricing because you've been working with a lot of these people, or you could do some of the work yourself in-house? What are you doing to like give that project the edge?
Well, we're center city, so zoning, you can do whatever you want when you're
Okay.
center city. And then as far as cost, I kind of feel like I'm in no man's land. You've got contractors that will do smaller stuff, and you've got contractors that'll do bigger stuff. But right at this, 16,000 square foot is pretty
It's
niche.
tough.
Yeah, there's only a few people that do it. So no, I would say, the way that I'm going to save money, hopefully, is that we're going to put people on payroll. We know enough people in the trades and it's a small enough project that instead of hiring a framing crew, we're going to hire framers.
Yep.
Instead, and we're going to buy the materials ourselves instead of having the HVAC company mark them up 10, 20%. So
and it probably makes sense for you to move forward on a project like this on the other side for the management, because it's 10, 16, 20 units. It's sometimes a little too small for somebody who doesn't have management if you have to pay those fees. I'm assuming that you're going to manage these, and that's part of the upside to this deal for you.
I'm going to manage them, but the fees are going to then go right to the other company management. So I still keep everything compartmentalized. So it's got to make sense with the management regardless.
Good.
Yeah.
Good. Yeah. That's good. Conservative underwriting. So then what about the construction cost? I mean, obviously we've gone through, craziness. We're now facing the higher interest rates. How did you kind of put together your pro forma to absorb some of those interest rate increases and construction potential, increases?
Yeah, it's just going to be more money out of my pocket to get to completion. So I think when we started the project, interest rates were still a little over 4. And initially, I don't think I had to bring much money to the table at all. And fast
so you
forward
were
to
taking
closing,
basically the value of the building, you got an appraisal that was higher than what you had owed, or if you already owned it completely, you then took that to the bank and they were giving you essentially 100% of what you needed.
Yeah.
But now you're taking a little bit more money from your own pocket to bridge the gap.
So the deal as it stands today is, I'll get credit for my equity of owning the building of 600. And then I'll have to bring another 350. So I'll be all in for 950 in equity, and then the bank will finance another 1.2 on top of that.
And then you have 10. How many bedrooms?
Yep. So there'll all be 1 bedroom.
All loft style. Okay, 10 loft style apartments, 21 parking spots. That's a pretty good deal. And you got your offices going in on the first floor.
Yeah. So we're gonna keep about 1,500 square feet on the first floor. That'll give us 2 conference rooms, and it'll give us what we call the agent lounge. So I'll continue to operate the sales brokerage out of that space. And I leave it as a perk for agents. So we do a 100% commission model. We charge just a flat fee, no desk fee, no dues, nothing like that. So it's a place where the agents can just come, make copies. They can sit down if they don't have a workspace at their home. And it's kind of like socialization. I've got it's not cubicles. So we're all kind of like in a line around the room. And we can just talk to each other, talk about deals. Sometimes we're writing offers on the same deals. We get into real estate, and it's a good, we can listen to each other's calls. I can mentor people pretty easily. So it's a space for the brokerage. And if they bring a client, I want them to have a place where they can sit down with the client in private and talk. So we'll retain that. And then the basement, we're not really developing. We're going to put a small fitness center for the apartments upstairs. We'll probably put a little bit of storage, and then I'll retain a little bit of it for my construction guys just to house, the various things that we've got that need storage.
As you kind of unpack this investment of yours, it kind of rings true, kind of just what I've seen in some of the other markets across the country. And that if you're really focused on one particular market, being a broker in that market, you hear everything first. That I think that's a really good thing for you guys to have in house. I think it's a really smart play. For the folks who are kind of going in different markets, that might not be the move, but it sounds like you're ready to be here in Rochester for the long term, kind of continue to really build the community up. And then you add that on with your management companies, your in-house construction. You're kind of really giving yourself, you're giving yourself the edge just by hearing about deals and, kind of knowing things that other people, if I were just to come to your market, I would be at a major disadvantage to you if I'm playing, in these, 10, 20, 30 unit, type complexes. Is that a fair assessment?
Yeah, but I mean, Rochester's smaller than you think. So I think you would come up to speed pretty quickly. There's only a handful of players, and you would meet them. You would meet them pretty quick. If you started going to the steps, or once you meet one, you'll meet another, and you'll
Sure.
get through everybody within no time.
Yeah,
And I
that's
would say in
I know that in Salisbury, Maryland, it's not a large market, definitely tertiary market. Attracting capital here is difficult, but the rising tide lifts all boats. I agree with that statement completely. And even though you're still competitors, you still, in a way, kind of work together because you want them to do the project. You're kind of rooting for them and build the area up. And I think it's kind of a friendly competition in a
Yeah,
way.
and we've got a lot of different asset classes. We say ABC, but I mean, I really feel like Rochester is more nuanced. It's really hard unless you come and you look at the properties, and you feel the neighborhoods. But I can segregate, different degrees of an A, different degrees of a B, different degrees of a C. So in my head, it's not ABC. It's like 1 through 10.
It sounds like you're setting yourself up for the long term. So what's next? It sounds like you're potentially looking to bring in additional capital, but what does that look like? And where do you see yourself in the next 5-10 years?
Yeah, I mean, I liked your podcast. I like what you're doing with the development. I really want to see things constructed from the ground up. I think maybe, economically speaking, we're finally entering a phase where that's going to make more sense than it did in the past. Throughout my career, I've always been like, it would be stupid not to buy existing. It's so cheap. Like the cost of construction versus what I can buy here in Rochester, it's a no-brainer. I'm going to take the stuff that's already been erected for a fraction of the cost of building it. So while I want to pivot towards the development side, I still think we're kind of in that transition where there's going to be a lot of existing opportunities for redevelopments. So most realistically, I'll probably do a lot more value add type plays on areas that are in transition and areas that are up and coming. But we're actually one of the more forward thinking cities right now, where, back in the 70s, a lot of cities would cut up their downtown by putting in a highway that circle the city. We've got it. If you look at a map of Rochester, there's a circle right around it, and it's called the inner loop, right? And the inner loop pretty much destroyed the urban fabric, going from the walking neighborhoods with the low rises into the downtown core by having this I think it's a 6-lane, 7-lane sunken interstate that circles around the downtown. So we're infilling it, and we've done our first infill, and it was the section of the loop that bridges our Class A with our downtown. And our downtown just got obliterated. It used to be a great place to go, and we lost all those legacy companies, became a ghost town. It became an area where people are scared to go at night, and we're trying to reinvent ourselves and get ourselves back on the map. And I think this infill has been huge. So we did, it was, I'd have to check the exact distance, but right around a mile-ish of new parcels that all got RFP'd, request for proposal, by the city of Rochester for developers to build new stuff from the ground up. Most of it's mixed use. We got a hotel, our science center redeveloped. They got a big parcel to expand, and we got probably at least 10 parcels that got erected over the last year, and it's really made a huge difference. It's definitely turned the tide on part of the downtown, the eastern side, and now we've just got state funding committed to fill in the next section, which is going to be the northeastern quarter, and it's about 6 times larger than the last one that we infilled. So I think it's several miles of interstate that's going to be brought back to grade, and it's going to be all developed. So I think there's a lot of opportunity where I'm at right now. So I'm looking, and I'm really focused on that type of, I know that's going to happen. I know it's going to take time, but I'm going to be strategic about, what other people are doing and buying. So I'm part of that infrastructure. And maybe if I can get myself to that point in 2 years, or whenever they have the new RFPs, maybe I'll be able to throw my hat in the ring for something like that.
Yeah, those type of, like forward thinking local administrations who really are trying to focus on the downtown again. I think those are special places across the country. And what you kind of described to what's going on there, the people who are willing to kind of jump into a little bit more patient capital, kind of let these things play out over, a long term, not the in and out type of investor. I really think you're going to see some good returns on that sort of stuff. as the malls kind of go away and, the life comes back to the downtowns and it's the breweries and the shops and the apartments over the buildings again, I think you're going to see that life. We're seeing it here in Salisbury. It sounds like you guys have it, really in a forward thinking direction. You guys are headed in a forward thinking direction up there. I think it's going to be interesting to watch how it plays out. That's, that's interesting to hear. Definitely definitely a good, little tidbit there. I'd be interested to hear, how it all turns out in about 2 years. Maybe we'll have to jump back on the phone or do another video here to kind of see how that has, played out in Rochester.
Yep, the state has committed the funds for the infill, so it's definitely going to move forward. And then the other big piece, two other big pieces of news that Rochester got, we'll be the first city in America to have a state park in our downtown, which is kind of cool. So we've got some waterfalls that are going to become a state park. And Constellation Brands, which is huge, their corporate headquarters is in one of our suburbs, Victor. They announced that they're going to move their whole corporate headquarters to downtown. So the city is doing this.
Those are the major moves that you guys are checking a lot of boxes. When you start to really bring critical mass back down, heads and beds, you're checking all the right boxes. And I think that gets investors more and more excited, and especially the people who are like, I would, consider it a tertiary market. Some of these people who are, trying to find yield in the DCs and Atlantas and, or, Austins or Phoenixes of the world, sometimes they're not getting what they're looking for. And it could be a nice alternative.
Yeah. I've never had any reason to go anywhere else. I've explored other markets and I always come back home because I think our numbers in Rochester are really kind of an anomaly. And, I like where I live and live, work, play. So I'm all about Rochester. Yeah.
So you're headed in the direction of kind of getting to a bigger development company. Are you going to give up all of the, the existing smaller assets? Are you going to just hang on to them? What's the long-term play? Is it just to trade up? Or are you 1031? What are you doing to kind of keep the cash moving?
I think I'll set and forget those.
Okay.
Yeah, I think so. I don't see myself as selling. I might, maybe I'll pivot and maybe I'll really need the capital or something. But at this point, I don't see myself doing that.
So you've been a super successful real estate developer, and now you're just feet up and on the beach on the weekends and drinking beer. Yeah. What are you doing on a daily basis now?
Well, I've got 3 kids, so spend a lot of time with them, teaching them how to ski over the winter. We do like to go to the beach in the summer, do some hikes. So a lot of family time when I can squeeze it in, and then otherwise I'm pretty much in charge of the 3 companies, and I'm trying to get people in good positions where I can go away a little bit and enjoy some family time and know that things are going to get handled the way that I want to get them handled.
Yeah, no, it's not a 1 year, 2 year, 5 year thing. It's not even a 10-year thing. You got to get in, you got to put the work in every day for a long, long time. A lot of people think that, real estate is that passive income that they see or read about. I suppose it's passive if you have your money invested with folks who can manage it for you. But if you're really thinking about trying to be on the active side, it's probably a lot more than most people realize. And I think you are a testament to that.
Yeah.
So
I still enjoy going to the steps, so I'll probably always do that. And going to like the city foreclosure auctions, and
you're just a real estate guy. You just like it all. Yeah.
I just like it. Yeah. I like the network. I'm friends with all the people that do it. Where you think, it's going to be competitive and you're not going to like those people. Those people are actually your friends. And we do a lot of business together where, one guy's on vacation and he's not at the auction. And then, we call him because we have the contract and then he does something with it anyway, or vice versa. I'm away and he's got something. So, people that can close deals, they like to congregate together because, if you are friends with a bunch of closers, then there's a lot of opportunity. You're going to make money whether you were the person that found it or not. Everybody, there's enough meat on the bone that it can help everybody. It's a world of abundance here. Is kind of how the people that I interface with all operate. And we like to bust each other's chops, but it's all in a good spirit.
Well, I appreciate you coming on today. If people want to get in touch with you or learn more about what you guys have going on, where can they reach you?
So I've got updegraff.info, and that'll link you to the 3 different companies. Yeah.
Well, I appreciate all the insight, and we'll certainly want to circle back and hear more about what you guys have going on, and as the area continues to kind of rebuild and find its new next chapter, I guess, if you will.
Yeah, absolutely. And I look forward to following what you're doing. It's amazing stuff.
I hope you have a good rest of your day. Thanks.
Yep. Thanks, Nick.